Hello dear students, welcome to the 10th session on the chapter Death of a Partner. Here in this session, I am going to take up the second question of recording joint life policy transactions in the books of partnership firm as per third method, that is maintaining both joint life policy and joint life policy reserve account at their surrender values. Let me read the question now. A and B are partners sharing profits and losses in the ratio of 3:2. They took out a joint life policy on 15/1/2007 for 20,000 for 20 years. The annual premium is rupees 1,000 being payable by the firm. The firm closes its account on 31st December every year. The surrender value of the policy for the last 5 years were as follows: 2007 nil, 2008 200, 2009 550, 2010 780, 2011 900. B died on 10th February 2011 and the claim on the policy was collected on 15th March 2011. Prepare joint life policy account and joint life policy reserve account. So this is the present question. Let us analyze the question and find out what are the informations given here. It is stated that there were two partners A and B and their profit sharing ratio was 3:2. They have taken out a joint life policy, that is a single policy has been taken out on the joint lives of both the partners together, that is A and B, and that has been taken on 15th January 2007 for rupees 20,000 for 20 years. So here the sum issued or the policy amount was 20,000. So this is the amount which the insurance company would pay them when the policy matures. Okay, and the tenure of the policy while taking up it was 20 years. The annual premium has been paid to the extent of rupees 1,000 and which is payable by the firm. The first annual premium has been paid when the policy has been taken out, that is on 15th January 2007 by paying rupees 1,000. Okay, and thereafter in the subsequent years the annual premium becomes due on the same date, that is 15th January of every subsequent year. The firm closes its account on 31st December every year. So here the accounting year begins on 1st January and it ends on 31st December every year. The surrender value of the policy for the last 5 years were as follows. So here the surrender value is nothing but what is the amount the insurance company would pay them if at all they surrender the policy before it matures. For the year 2007 it is nil, that is if they surrender the policy in the year 2007 they are not going to get anything from the insurance company. 2008 if they surrender they will get 200 rupees, 2009 550, 2010 780, 2011 900. It is given that B died on 10th February 2011 and the claim on the policy was collected on 15th March 2011. So here one of the partners, that is B, died on 10th February 2011, but the amount they collected from the insurance company on 15th March 2011. So based on these informations we are going to prepare joint life policy account and joint life policy reserve account. After analyzing the question, first work is to find out in which years we are going to pass first set of entries and in which year we are going to pass second set of entries. They have taken out the joint life policy in the year 2007. So the joint life policy account comes into picture from the year 2007. So we have to start preparing the account from 2007, 2008, 2009, 2010 and 2011. Okay, there itself we are going to stop because in the year 2011 the policy has matured because of death of one of the partners, that is B. Okay, so here out of all these 5 years 2011 is considered as the last year in which the policy has been matured because of death of one of the partners. So in the year 2011 we are going to pass second set of entries, except this in the before this whatever the years we have 2007, 2008, 2009 and 2010 we are going to pass first set of entries. Okay, so as we discussed in the previous session, in the first set of entries we find three entries. The first entry will be passed on the date of payment of premium, annual premium. The entry is joint life policy account data to bank account. Then two more entries will come at the end of every year, that is the second entry will be for making the appropriation of profit and loss account, that is to keep aside an amount which is equal to the annual premium payable on the policy, and the entry will be profit and loss account data to joint life policy reserve account. And the last entry of every year will be passed for reducing both joint life policy and joint life policy reserve account at their surrender values by passing the reverse entry, that is joint life policy reserve account data to joint life policy account. So these are the three entries which we are going to pass in all these years, that is 2007, 2008, 2009 and 2010. In the year 2011, that is second set of entries have to be passed. Here we have to first verify whether the partner died before making the payment of annual premium or after making the payment of annual premium. The premium becomes due on 15th January 2011, okay, but the partner died on 10th February, so which means that after paying the annual premium one of the partners has died. So we have to also make the entry for making the payment of annual premium. So in the second set of entries we have in total 4 entries. The first entry for making the payment of annual premium, the entry similar to the first set of entry, that is joint life policy account data to bank account. Then the other 3 entries will come on the date of maturity of the policy when they receive the amount from the insurance company. So here the second entry will be for receiving the insurance amount, that is policy amount from the insurance company, and the entry will be bank account data to joint life policy account. The third entry will be for transferring the ultimate balance left in the joint life policy reserve account to the joint life policy account, and the last entry will be for transferring the final balance of the joint life policy account to all partners capital account in their profit sharing ratio. So these are the 4 entries which we are going to pass in the year 2011. So let us start with the solution part now. We have to prepare joint life policy and joint life policy reserve account simultaneously. So the first entry of the year 2007 will be for making the payment of first annual premium, and the entry is joint life policy account data to bank account. So we have to make the entry in joint life policy account. On the debit side we have to write on 15/1/2007 to bank account, and the amount is annual premium, that is rupees 1000. Then 2 more entries will come at the end of that year, that is the firm closes its account on 31st December. So the date here is 31st December 2007. So there the first entry at the end of the year is for making the appropriation of profit by keeping aside an amount which is equal to the annual premium. The entry is profit and loss account data to joint life policy reserve account. So on the credit side, in the joint life policy reserve account on 31st 12 2007 we are going to write by profit and loss account amount is rupees 1000. Okay, after writing these 2 entries, the last entry of that year is for reducing the values of these 2 account to the extent of surrender value. We have to check what is the surrender value of the year 2007. So it is nil. Okay, whatever the amount we have, that should be cancelled. Here we find that we have debit balance of rupees 1000 in joint life policy account, and here we have credit balance of rupees 1000. So but we have to maintain these 2 account at its nil value, that is surrender value. So we have to cancel the entire amount which is there in these 2 account by passing the entry joint life policy reserve account data to bank account. So in the joint life policy reserve account on 31st 12 2007 we are going to write to joint life policy account 1000, and the other part of the transaction will be written here in the joint life policy account 31st 12 2007 by joint life policy reserve account 1000. After that we are going to close these 2 account for the year 2007. So we have 1000 here, here also 1000. We get the balancing figure which is nil. Actually normally when we prepare the account, if there is a nil balance we are not going to show that, but here we have to show that. In order to show that, we have maintained these 2 account at their surrender values. Okay, so by balance carried down is nil, and the same balance will be brought down at the beginning of next year, that is on 1st January 2008. 2 balance brought down is nil. Similarly in the other account also we are going to close the account here, and we get the nil balance. 2 balance carried down, same balance is brought down at the beginning of next year, that is on 1st January 2008. By balance brought down nil. Okay, so again in the year 2008 the policy has not matured, so we are going to repeat the first set of entry. So the second annual premium becomes due on 15th January 2008. So we have to make the entry joint life policy account data to bank account on this date 15/1/2008 to bank account, and the annual premium amount is same, that is rupees 1000. Again 2 more entries will come at the end of that year, that is on 31st 12 2008. So here the first entry will be for making the appropriation of profit. The entry is profit and loss account data to joint life policy reserve account. The date is 31st 12 2008. We are going to write by profit and loss account rupees 1000. Okay, then after writing these 2 entries we are going to reduce these 2 account to the extent of their surrender values. So we have to check what is the surrender value for the year 2008. So if you see here, for the year 2008, the surrender value is rupees 200. Okay, but we have to see what is the amount actually we have. So here if you see, the brought down balance is nil and we have 1000 rupees here. In total we have 1000. Again in this joint life policy reserve account also, nil balance plus 1000, we have 1000. So we have to maintain 200 rupees, but we have 1000. So what we have to do, we have to cancel the excess amount of 800 by passing the entry joint life policy reserve account data to joint life policy account. So in the joint life policy reserve account, on the debit side we have to write to joint life policy account 800. At the same time, in the joint life policy account we have to write by joint life policy reserve account 800, 1000 minus 200, 800 rupees. Okay, after writing these these three entries, we are going to close the account for the year 2008. So here we have 1000, here also 1000. So when we get the balancing figure, we get 200. So there we are going to write on 31st 12 2008, by balance carried down 200. Same balance will be brought down at the beginning of next year, that is on 1 2009, to balance brought down 200. Similarly, in the joint life policy reserve account also, so here we are going to close the account, and here also we are going to write same 1000. We are going to have the balance of 200 rupees here, to balance carried down, and the same balance has been brought down at the beginning of next year, that is on 1 2009, by balance brought down 200. Again in the year 2009, the policy has not matured. We are going to repeat the same entries. So the first entry here would be for making the third annual premium payment. So on 15th January 2009, we have to write to bank account 1000. Thereafter, two more entries at the end of that year, that is on 31st 12 2009, for making the appropriation of profit and loss account data to joint life policy reserve account by profit and loss account, amount is 1000. Okay, so after writing these two entries, we are going to reduce these two balances. The account will be reduced at their surrender values. So we have to check what is the surrender value for the year 2009. It is 550. We have to check what is the balance we already have. So here we have brought down at the beginning 200 rupees, and here we have paid 1000. Together we have 1200, but we have to maintain only 550 rupees. What is the excess amount we have? The excess amount here is 650. Okay. Similarly, in the joint life policy reserve account also, we have brought down 200 and we have made the appropriation of 1000. Together we have 1200, but we have to maintain only 550. What is the excess amount we have? 650. Okay. That amount should be cancelled by passing the entry joint life policy reserve account data to joint life policy account. So on 31st 12 2009, we have to write to joint life policy account 650, and the other part of the transaction will be recorded here by joint life policy reserve account. After writing this entry, we are going to close the account for this year, and we are going to have the balance of 550 by balance carried down. The same balance will be brought down at the beginning of next year, to balance brought down 550. Similarly, we have to do in the joint life policy reserve account also. We are going to close the account here, and we are going to have the balance of 550, to balance carried down. The same balance is brought down at the beginning of next year, that is on 1 2010, by balance brought down 550. Okay, again in the year 2010 also, the policy has not been matured, so we are going to again write first set of entries. So the first entry for making the payment of fourth annual premium, so on 15/1/2010, to bank account, amount is 1000. Again two more entries at the end of that year, that is on 31st 12 2010, for making the appropriation of profit by profit and loss account. Okay, then after writing this entry, we have to maintain these two accounts at their surrender values. So we have to check what is the surrender value for the year 2010. It is 780, but we should see what is the amount already we have in that account. So we have 550, which is brought down balance, and we have paid 1000. In total we have 1550, but we have to maintain only 780, that is surrender value. What is the remaining excess balance we have? It is 770, which we are going to cancel. In the other account, that is joint life policy reserve account also, we have same balance, that is 550 brought down and 1000 which is made appropriation. So 1550 we have, but we have to maintain only 780. The remaining balance of 770 should be cancelled by passing the entry joint life policy reserve account data to joint life policy account. So we are going to make the entry on the debit side, 31st 12 2010, to joint life policy account 770. How do we get the amount? You have to write in the bracket 550 plus 1000 minus 780. 770 is the amount which we have cancelled. The other part of the transaction should appear here in the credit side, that is on 31st 12 2010 we are going to write buy joint life policy reserve account 770. After that we are going to close this account 1550 on both sides. So we have balancing figure of 780, that is by balance carried down. The same balance will be brought down at the beginning of next year. Two balance brought down on 1st January 2011, 780. Similarly, in the other account also we are going to close and we are going to have the balance of 780. Two balance carried down and the same balance is brought down at the beginning of next year by balance brought down 780. Okay. Then now we are in the year 2011. 2011 is the year in which the policy has matured. So because of death of one of the partners, so which set of entries we have to pass here? That is second set of entries. So but here we have to verify whether the partner died before making the annual payment of annual premium or after. So payment becomes due on 15/1/2011. So but the partner died on 10th February 2011. So we have to make the entry for paying the fifth annual premium on 15/1/2011 joint life policy account data to bank account. Thereafter, on 10th February 2011, one of the partners, that is B, has died, but when the policy amount they recovered from the insurance company, it is on 15th March 2011. So on this date we have to pass another three entries. So here the next entry will be for receipt of insurance amount from the insurance company on 15th March 2011. The entry will be bank account data to joint life policy account. So here in the credit side we have to write by bank account. What is the sum assured here? 20,000. Okay. Then the next entry will be for transferring the final balance left in the joint life policy reserve account to joint life policy account. So here we have 780 rupees, same total we get, and the balancing figure here also same, that is 780, and this will be transferred to joint life policy account. You can mention that final balance transferred. Okay. And the other part of the transaction should be recorded here by joint life policy reserve account 780 rupees. Okay. And the last entry will be for transferring the final balance in the joint life policy account to all partners capital account in their profit sharing ratio. So here we are going to close this account and find out what is the balance. So credit total is more, that is 20,780. The same total will be written here. So when you deduct the 780 and 1000 rupees, we will have balance of 19,000. So this is the final balance left in the joint life policy account, which will be transferred to partners capital account in their profit sharing ratio. There are only two partners, A and B, and their profit sharing ratio was 3:2. So 19,000 into 3 by 5, 19,000 into 2 by 5. So A would get 11,400 and B would get 7,600. Okay. So this is the solution for the present question. Let us take a few more questions in the upcoming videos. Thank you for watching.